Hello everyone, and thank you guys for tuning back into another video. As always, if you enjoyed the content, make sure to leave a like and subscribe. But what I'm going to be doing today is going over part 2 of 3 of the trades that I ended up taking that helped me reach over $3,000 in this $100 challenge, and that essentially helped me bounce back from the $1,000 loss that I had a couple weeks ago. But I'm going to start off by explaining a trade that I took on AAPL, and for those of you who don't know, that's Apple. But what I ended up doing on this trade was I ended up entering a put position, and as you guys can see, the chart on Apple for the past month has been kind of just going downwards and trading sideways, so definitely a lot of money to be made on the put side. But if we go down here, I actually ended up trading it quite a bit this week also, which I'll get into more into a separate video. But this trade ended up taking August 19th, which was around a week and a half ago. So basically what I ended up doing was entering a 210 put position for a entry price of $183 per contract, which is also $183 once you add the $100 or 100 times multiplier because each contract. And I ended up buying 6 of them, and that was a fill of $1,092, and a couple of minutes later I ended up selling them for $1,218, which comes out to be $203. So that was around a 20-cent move per contract, which netted me roughly around slightly above $120. But I'll get into a more detailed explanation once I head into the TD Ameritrade chart, because those charts are a little bit easier to explain. But the second trade that I ended up taking was on Facebook, and this trade was a call position, which is kind of astonishing that I made money on a call position, since it's also showing a similar chart pattern to Apple, just kind of going downwards and sideways for the past month. But the opportunity presented itself, and because I was using good technical analysis, I was able to take advantage of that opportunity and make money on a call option, even though it's been going down for the past couple of months. But what I ended up doing was I bought on August 16th 6 185 call options for a price of $201 per contract, and at that same day, a couple minutes later, I ended up selling them at $2.34 per contract, and this netted me just under $200. I think it came out to be $198 if you do the math. But they were actually pretty easy trades, because like I said, I was just looking at the chart and the opportunities presented themselves. But now I'm gonna go ahead over and switch to the Thinkorswim chart and kind of explain a little bit more in detail what was going on through my mind and why I took these trades. So here is the Apple chart, and if we go back to the day I traded it, which was Monday right here, you can see that even before that, Apple had been gapping down quite a bit last week because of all the tariff news and trade war. And if we go back to where it had the high of day last week or 2 weeks ago, you can see that it was just around 212 right here, that big green candle, and then it just kind of started selling off. So if we go ahead and switch the time frame to the 10 days and go back to that same spot where I traded it here Monday, you can see that Monday morning it began to gap up, and it reached that high of 212 again. This time it actually reached a high of 212.73, so it did kind of break the previous week's resistance, and this time it started forming some resistance just below the 213 area. But it started to show some signs of weakness, and it showed a lot of signs of a reversal coming. Unfortunately, I can't show you the 5-minute and 5-day chart because this trade happened 2 weeks ago, but you can kind of see what I'm talking about on this first green candle right here. You can see that even though it gapped up at market open, the wick on the green candle is a lot bigger on the upper side, and when that happens, that usually means that even though the stock did end up higher than the previous candle, it means that it reached a point that it wasn't able to sustain. In this case, it was the high of 12.73, so it wasn't able to sustain that price of 212.73 cents, and ended up closing at 212.11. So that's almost a 60-cent difference, which it was not able to hold. And so that to me showed some bearish and reversal indication, because like I said, it wasn't able to hold that, and it was getting rejected and it wasn't able to cross over the 213 area and continue its rally. So I got into my put position around somewhere around 9:45. This was a market open, so this next candle was 9 o'clock, but this is Eastern time, so it's 1 hour in front of my time. So no, I said that wrong. This is my time, and on Robinhood it showed 9:45 Eastern time. So in my time, that's around 8:45. So I got into the trade around 8:45 my time, which is right around market open, right in the first 15 minutes. And so you can see that after that big green candle, we had a nice little dip and reversal. It got as low as 211.26. So it was almost a dollar move. No, almost $2 move from the high of this green candle. So we were able to profit fairly quickly on that nice little dip, and I think this trade was around 120. So we definitely could have made more if we held on that full move, but I think if I remember correctly, I closed out the trade after around a 50 to 60 cent move, and that's why it wasn't a bigger win. But overall, this trade happened fairly quickly. You see that market open, gapped up, and then once again rejection happened at that resistance, and we were able to make a nice and quick profit off that. So now I'm going to go ahead over to the Facebook chart and explain that trade. So here's the Facebook chart, and as you guys can see, going into the trade, what ended up happening, or what essentially caught my attention on Facebook, was that it had a really, really big drop that week. You can see that earlier on in the week before I traded it, it reached a high of 191.38, and then it's just started selling off really, really fast and a lot. It got as low as 177, I believe, was this candle right here. Yeah, 177.29. So that's almost a $14 drop within 2-3 days. And so what caught my attention was that big drop, and so I was waiting for a dead cat bounce reversal on Facebook. However, you see that we didn't get that reversal up until Thursday, and that continued into Friday. But I definitely had my eyes on Facebook because of that reason. However, I ended up trading it on Friday. But if we look into Thursday, we can see that it started consolidating a little bit, and then Thursday morning it started to gap up a little bit, and that gap up continued up until midday, where it kind of got held back around the 183 resistance area. It was not able to break over that 183 area, and so it started to drop into the close. However, Friday morning, you can see that the continuation from Thursday continued, and it started to gap up even more going into the pre-market and opening bell. It got as high as 185.05, so that kind of showed some resistance around the 185 area because it wasn't able to push higher, and upon market open it started to gap down. However, it gapped down all the way to the 182.50 area, and so what that told me, in my opinion, was that it started to form some really good support around the 182 area because it wasn't able to drop below 182. So unfortunately, I can't show you the chart that I was looking at because I can't go into a smaller time frame because this trade happened 2 weeks ago. But what the chart basically showed was what I'm repeating right now, that it showed some really good support around the 182 area, and that's the reason why I ended up taking the trade. And you can see that it ended up bouncing from that 182 area. It got as low as 182.36, and then it ended up getting a high of 185. But once again, it got rejected from that 185 because it just was able to break it, and then it started to gap down a little bit. But I ended up making my trade in this green candle right after it dipped into market open. I saw that as a good buying opportunity, and that's exactly what I ended up doing, and that's how I ended up making almost I think it was 198, I believe I said. So it was a quick $198 on this trade. Kind of just looking at the support and resistance, so not much to it, just kind of looking at the same patterns that I usually trade, which helped me out. And you can see that if we go ahead and zoom out, it kind of just traded sideways and continued the downtrend. So that's why I always repeat to everyone that watches my videos and that are in my Discord chat that if you have profits, it's always better to take them, because you can't guarantee that those profits are going to stay a week or a day from that day. So it's always better to not get greedy and take your profits and repeat the same strategy. But that's pretty much it for this video. I hope you guys enjoyed, and I will see you guys in the next video.